Welcome to Cambridge House Live. I'm Bridgitte Anderson and I have Mickey Fulp with me, the author of The Mercenary Geologist. Nice to see you again, Mickey.
Well, it's always a pleasure, Bridgitte.
Let's start off with a bit of an overview, the state of the markets. Where do you see things right now?
Well, commodities remain range-bound, but the junior resource sector continues to look pretty dismal. I came on here in January and I told you I thought the bottom was in. Well, man, was I wrong. You know, we have come down and down and down since then. The juniors, there's no liquidity, there's no buying, and any selling continues to take stocks down. I do not see that ending. We're coming into the summer doldrums now, so we might look at Labor Day for possibly a rally amongst specific juniors. I think for the most part, the entire sector, a lot of that's going to go away in the next year or two.
So putting you on the spot, asking again, you don't see the bottom yet then?
No, perhaps we'll see the bottom this summer. You know, I'm always kind of an internal optimist in the fact I'm a geologist and you almost have to be. So I'm looking now into Labor Day, perhaps we'll see the bottom this summer.
And are there some trends or patterns with that you're seeing going on with some of the junior mining companies that investors should be aware of?
Well, in these bear markets, the baby gets thrown out with the bathwater. So there are very quality juniors that are trading much below what their market capitalization should be at this point. There is a significant number that are trading for cash value. So as contrarians, these sort of markets present buying opportunities, and we may be looking at the buying opportunity of a decade here right now on very specific companies with the right criteria, the right qualities.
And again, I'm going to ask you about this, and I know we've talked about this a couple of times before, but for those investors who are ready to buy and would agree it's a buying opportunity, what are the most important criteria when you're evaluating where those opportunities are?
Well, you have to look at the three main criteria. My criteria, that is, tight share structure, people with experience who've had success before, and the right projects that have possibilities of making mines. The other thing that you need to look at right now is cash in the bank. So you want to see companies that have a kitty that will allow them to progress their projects.
Because that's really the problem for a lot of these junior mining companies is their capital budgets been eradicated, and they certainly don't have any money for exploration either right now.
Right, and your point's well taken there. There's very few mining companies. Most of them are explorers. They have no cash flow, and for the most part, they finance their activities with equity, and that leads to dilution of current shareholders. So another way to look at it might be with companies, do they have alternative means of raising money, perhaps through selling a royalty stream, or do they have a group of angel investors or a strategic group who will come in and finance them when the time is right?
Very good things to keep in mind. Let's break it down a bit and talk about some of the commodities. We'll start with what seems to be on everybody's mind these days. Let's talk about gold. You have said, and I think I saw this on your Twitter account, that it is an irresistible buying opportunity.
It was. It still is. I bought a month ago or whenever it was in mid-April, that first correction. From my point of view, gold is not an investment or a speculation. I'm a gold hoarder, so when gold dips like this, I look at those things as buying opportunities. Certainly a short-term outlook of gold is not particularly positive. We are in at least a bear dip, and I would submit we're in a bear dip within an overall secular bull market. But for contrarians like me, that presents buying opportunity.
Do you buy into some of those theories that Gata and others people are putting forward about some of the reasons behind the drop?
Well, absolutely. There's no doubt the gold market is manipulated. Look what happened about a week ago when overnight, when everybody was asleep, all markets were closed except a minor. This is before Hong Kong opened, before the Australian market opened. Traders came in, drove down the price of gold, which created short covering and excuse me, created long covering, and then stop losses came in, and as soon as the market went way down, then all of a sudden they came back in and bought again. So they're making money by doing this, and it seems to me, yes, I agree with the GATA guys that the market's manipulated. I go at it a little bit differently in the fact that, okay, get over it, assume that it is, and learn how to operate within the paradigm you're given, because there's money to be made.
And the paradigm is very different, I think, now than it was, a decade or two ago.
Well, yeah, we've got this giant paper gold market that we didn't have created additionally through the ETFs. So we're seeing a bipolar market now between the paper gold market and the physical gold market. When the correction came in on gold, physical buying just took off and premiums increased. So there's actually an arbitrage going on right now between the price of gold as it's listed and the premiums paid, especially in Asia, where buying is really coming in. I heard today that some producers are considering selling their gold into the physical market in Asia for that arbitrage.
As you say, a very different paradigm. Want to move on to copper. You're very bullish on copper. Talk to me about that. What do you see kind of fueling that?
Yeah, I'm bullish on copper in the long term. I'm a bit equivocal in the short term right now. We've seen demand come off, especially from China with a weaker economy, but that's balanced by the fact that we've seen supply disruption. Major supply disruptions have occurred over the last couple of months. First, we had the slide at Bingham Canyon, which is going to take a significant amount of copper off the market. That mine is going to produce, at best, half of its normal yearly production right now. That's the 11th largest copper mine in the world. And then last week, we had a mine disaster, a tunnel collapse at the Grasberg, Freeport's giant mine in Indonesia, which is the world's second largest mine. They are off for an indeterminate amount of time right now. So the supply disruption is probably fairly bullish for gold or for copper in the short term.
What about uranium? You've been bullish on uranium since about 2009, yet it sits at its lowest level since 2008. So where do you see that going?
Well, once again, the short term does not look particularly strong. We have enough uranium for short term supply, at least through the next year or so. But the longer term fundamentals of uranium are absolutely compelling. And as a contrarian, I think now is the time to be getting into some of these beaten down uranium stocks, and I have been doing that.
And would you say the same situation that applies to platinum and palladium? Have you been getting in there as well, knowing that you can see a bit of a downturn?
Well, yeah, and so once again, the platinum palladium fundamentals are absolutely compelling. The average cost of platinum production in the world in South Africa dominated is $1,600 an ounce. So every ounce of platinum is being produced out of South Africa. The mines on average are losing money. The demand is coming from catalytic converters. We've seen recently that the platinum palladium ratio has fallen below 2, and that's quite unusual. More than a decade since that's happened. So in this precious metal correction, palladium has continued to go up. It has not really corrected other than in April, the second correction we had. Palladium continues to go up. The problem I have is I can't find a good platinum palladium company. I'm unwilling to accept the risk of South Africa or Zambia or Russia for playing the stock market. I don't see deposits in North America or companies that are compelling. So there's a disconnect for me right now. I would like to find a good platinum palladium company. I don't seem to be able to do that.
Not coming up right yet. Overall, you would say that this is definitely a time to be doing the due diligence. This has been a tough time for sure, but lots of buying opportunities, as you say.
Yeah, it's a buying opportunity, and the retail lay investor needs to look at it as you want to You want to buy low and sell high. So things are low right now. Do very good due diligence, very strong research. Make sure you know why you want to own this stock, and put in stink bid. If it gets filled and it goes lower, well, you like the stock, that's another buying opportunity. So you just got to make sure you pick the right stocks.
Indeed you do.
Yes.
Great insight, Mickey. Thanks so much for taking time to talk to us today.
It's always a pleasure. Thank you very much, Bridget.
That's great.